Peter Begney, welcome back.
Good to be here. Thanks for having me, Peter.
We last caught up in June at Quebec conference. Maybe actually for those who haven't seen the story or haven't heard it before, quick highlight as to who you are and what the company is.
Yeah, so very brief, Gold Royalty. We're still relatively young. IPO'd 2.5 years ago. We now have over 220 royalties, really anchored in Quebec, Ontario, and Nevada, some of the best mining jurisdictions in the world. And we're a pure play gold, precious metals focused royalty and streaming company.
Good. Talk me through what's happened. Because obviously there has been some activity since we last spoke. Obviously, Cozemin's been announced and closed. So talk to us a little bit about that deal.
Yeah, so it's been a busy summer for the team, closing the Cozemin acquisition. We announced that at the end of July. Really excited about this new asset in our portfolio, our first royalty in Mexico, an existing copper silver mine. It originally started producing in 2006 with just 5 years of reserves, and now here we are in 2023, a great track record of exploration success, and like you mentioned, immediately steps us in to a much stronger cash flow position, and we're looking at breaking into a much stronger free cash flow position in 2024 with Cozemin as well as a few other development stage assets coming online.
What attracts you to Cozemin? Because obviously it's not your typical type of project that you'd have a royalty on, is it? You're specifically mainly just gold royalties.
Yeah.
Copper. What drew you to it? Was it the commodity, or was it more the actual project itself?
It first and foremost comes down to asset quality.
Yeah.
We really like the asset. Our technical team had an in-depth review and knew the asset previously as well. And then copper as well. The fundamentals are quite attractive, but there's a strong silver component here, so it fit our precious metals focus in a polymetallic setting. But high grade, first quartile on the cost curve in terms of copper assets, and just the exploration potential that we see beyond the existing mine life, which is out till 2030 based on reserves alone. But some resource conversion, continued exploration success could see that mine life be extended beyond that.
Okay, and this transaction now brings you into cash flow positive, or should do into next year, right?
Yeah, so in the very near term, we're looking at going from no cash flow, no revenue producing royalties 2.5 years ago at our IPO to now being in a strong free cash flow position in 2024 with the addition of Cozemin, and then importantly, the commencement of production at Côté, one of our key cornerstone assets in Ontario. It's going to be one of the largest gold mines in Canada once it starts production in early 2024. As of June 30th, they were over 86% complete construction, so well on track to deliver on that production timeline.
Let's touch on Côté actually. So remind us, who are the operators? What's the scale of this? What's the NSR? What's the royalty look like?
So our royalty at Côté is a 0.75% NSR over the southern third of the pit. It's being developed by IAMGOLD. They have had some difficulties on capital cost inflation, but done a great job restructuring the asset, divesting some non-core assets, and now they're fully funded and on track to deliver on that production.
This is a cornerstone asset for them, right? This is a core.
It's the focus of that company. It's all hands on delivering on that production profile for IAMGOLD. But it's going to be a massive mine once it's up and running. 495,000 ounces a year of annual production over the first 6 years. With that high-grade portion of the deposit at surface, which is important for us because our royalty covers the southern edge of the mine, which is where that higher-grade mineralization is occurring, and then it dips towards the north. So we get a faster payback because they're mining our portion of the mine sooner.
Good. Okay. When we actually caught up a few months ago, Agnoka Eagle, I think it was on the day that we actually had the chat, so none of us had a real opportunity really digging deep into the new mine plan for Odyssey. But obviously, upon reflection, you've had a chance to have a look at that now. What does that indicate, or what does that mean for your royalty and your portion of the royalty on that project?
Yeah, so as a reminder, our royalty at Odyssey is a 3% NSR over the northern portion of the Odyssey underground mine. So the Odyssey mine is going to be the future of the Canadian Malartic Complex, the underground extension. And our royalty specifically covers the East Malartic deposit, the Odyssey North deposit, portions of the Nori zone and Odyssey South, and then what really excites us is the internal zones. And Agnico Eagle has continuously highlighted this as not just fueling the growth over 2028, 2030 when Odyssey really starts to ramp up, but between 2024 and 2028, they could see the internal zones really supplementing the existing production profile. So we're quite bullish on seeing that represent some upside in the near term here for our cash flow profile.
Well, I guess from their perspective, they probably need to, don't they? Because obviously the open pit is now sort of in a case of closing down, right? So, and they're what is it, 40,000 tons excess capacity?
The upside at the Canadian Malartic complex is really exciting. They're going from an open pit operation, 60,000 tons per day, and then stepping down to a 19,000 ton per day operation in the underground. So with over 40,000 tons per day of excess capacity, they're really looking for avenues to fill the mill, increase that annual production, increase resource conversion from areas like the internal zones, like East Malartic, but also the neighboring deposits. And that's why we're also excited by the patchwork of royalties we have, not just on Odyssey, but we have, if you look at our presentation and a map of all of our royalty coverage, the Midway project, Malartic South, and all the other royalties we have throughout the Abitibi could represent supplemental feed for that starved mill.
Good. What I'd love about this story is obviously the annualized growth of revenue that you guys are forecasting at the moment. I think maybe it might be worth us actually running through that again. So talk us through maybe this year, then maybe looking further out towards maybe 2026, 2027 as we start seeing Wren and all the other assets come online.
Yeah, absolutely. So this year we are looking at that roughly break-even cash cost versus our revenue, and we do have a healthy treasury and liquidity available. But 2024 is a great step change for the company. We've got a full year at Cozamin coming in. We've got Cote entering production and potential increased production at Canadian Malartic with the likes of the internal zones coming online. On consensus estimates, we're looking at upwards of $12 million in revenue next year. But beyond that is where things really start to grow. We have a 60% compound annual growth rate in our revenue over the next 3 years. So we're approaching upwards of $25 million in revenue by 2026. That's before you even see Odyssey coming online in 2028 towards the end of the decade. With 220 plus royalties, we have these dozen development stage assets really representing the majority of our net asset value. And the other 210 odd royalties, or the market's really getting them for free right now, and could supplement that revenue profile further towards the end of this decade in the early 2030s, and we get no credit for that in the market currently.
No, you don't. And I guess something that I wouldn't mind touching on as well is obviously your role within the company. Obviously you're looking for new opportunities as part of the Corp Dev team. When we spoke in June, we were sort of noting that it's a bit of a tough market for gold equities, especially the juniors in the space. That hasn't really changed. Is it still the same line? You need to be very selective, you need to conserve cash, and obviously you've done one deal since then. Are there more deals on the table? Are there other opportunities that you think might potentially come to fruition?
I'd say we're as busy as we've ever been right now in terms of the corporate development front, but we're being very disciplined. And I mentioned this in June as well, that we look at cash flowing royalties that represent an accretive transaction on a per share basis for the company. We have a great tail. We have a lot of exploration upside. We get that exploration upside for free. We don't need to go out and acquire longer dated assets. Everything we're looking at right now has that clear line of sight to cash flow. And that's really our strategy from a corporate development standpoint.
Perfect. Peter, good to catch up. Thank you.
Yeah, thank you very much, Peter.
Cheers.